Welcome, ladies and gentlemen, to Commodity TV, and we want to do now a online company presentation with Scott Eldridge, the CEO of CanaGold, which is the former CanaGold Resources, as the company changed their name some weeks ago. And we want to show you this fantastic company now with a slide presentation and presentation of Scott. And of course, we want to discuss some themes here. Scott, good morning. How are you doing? I hope everything is fine.
Yeah, I'm doing very well, Johan. Good to see you, and appreciate the opportunity here for an update.
Yeah, fantastic. Thank you very much. Then let's go in medias res. I will turn up the presentation, and then I would say the floor is yours.
All right, thank you very much. So let's get started. So the general theme of the presentation here is that CanaGold is advancing Western Canada's highest grade gold deposit towards feasibility study. This is our standard cautionary note, so be forewarned that I may be making a few forward-looking statements throughout the slides here. So as Johan mentioned in the introduction, 2020 last year was what we call the rebirth of the company. We decided to hit the reset button from several perspectives. We changed our name from CanArc to CanaGold. To reflect the fact that we're going to be focusing all of our attention and resources now on our Canadian projects. However, we do still have a few projects in the US that we will probably option out to other companies. And we closed off a 5-for-1 share consolidation. We brought on a new director as well as a new VP exploration. And we closed off on what was originally a $3.2 million financing that we upsized to 8.4. With some very significant lead orders from institutional investors, including Eric Sprott, who now owns just over 10% of the company. And as I mentioned in the introduction, we're now strictly focused on Canada, and that is on our flagship asset right at home here in British Columbia. And that's the past producing high-grade New Polaris gold mine, and we'll talk much more about that. Mm-hmm. Let me give you a snapshot of our public company information. So we have 3 exchange listings, main board, TSX here in Canada. And post-share consolidation of 5-for-1, as I mentioned, we now have about 70 million shares outstanding. Attached to that $8.4 million financing, we have about 11 million warrants. And we're currently trading a little higher than what the slide says. We're probably at 66 cents right now. So that puts our market cap just under $50 million Canadian. And we do have a very healthy cash position of about $8 million that's going to allow us to move forward on our very significant plans for New Polaris, which I'll talk about. Rounding off our shareholder roster in terms of our top shareholders that actually control about 40% of the company. I mentioned Eric Sprott at about 10%. On that list also includes the Ruffer Gold Fund from London, England. Brad Cook, our chairman, also founder of the company, as well as several high net worth individuals from Europe and the United States.
Scott, one question. What are the exercise prices of the warrants and options like approximately? I know you cannot have each position in your mind, but what prices we are talking?
No, that's a good question. We should clarify that. So basically the financing was done 5-for-1 share consolidation. So prior to the consents, so very simple math. If you multiply that by 5, that would give you the strike price. So there's 65 cents, and we're currently trading at 66. Mm-hmm. Okay. There's also an accelerator included on those warrants. So as we get into our infill drilling that I will talk about, we will be getting some undoubtedly very convincing significant results there. There may be an opportunity there to have some of those warrants exercised. Mm-hmm. In terms of our board and management, I'm relatively new to CanArc. I joined the company about 2 years ago. I was approached by our founder and chairman, Brad Cook, who I've known for about 10 years. Brad's a geologist. He's also the CEO of Endeavour Silver. Many of the listeners know Brad, and he's one of the most respected executives in the space. Gary Biles is our president and COO. He'll be instrumental as we move forward New Polaris. Gary's built and operated 4 gold mines in his career, 3 of which were high-grade undergrounds, including fabulously high-grade Eskay Creek here in BC. And Troy Gill is our new VP exploration, having joined us recently. He originated out of Rio Tinto. He twice won their internal award for Discovery of the Year. briefly mention our board of directors. Deepak Malhotra is our lead technical. He's a PhD metallurgist. Andrew Bowring is our newest director. He joined when we restructured the company, doing the 5-for-1 rollback and the financing. He took a significant piece of the financing and brought in a lot of the people that he works with. Andy's a capital markets specialist, and he's definitely added to the board here as we beef things up and move forward. Let me give you a snapshot of our assets. So again, we do have projects in Canada and the US, but changing the name to CanaGold is truly reflective of our new strategy, where all of our focus and attention now is on Canada, and narrowing in that's really going to be most of our work is going to be done on New Polaris. So let me give you a brief history on New Polaris. This is a past producing high-grade underground gold mine. So it enjoys many benefits of being a brownfield project. And under the old production, they mined out about 250,000 ounces at 10 grams. Fast forward to today, we also have here a 1 million ounce unexploited ore body that is at 10 grams. We have a very robust PEA on the project that was done at a gold price significantly lower than we are today. At $1,500 gold, the after-tax IRR hit 56%. The NPV in Canadian dollars is $500 million, and this is a very quick after-tax payback of less than 2 years.
Mm-hmm.
So as I mentioned
what would be the capex for this?
Yeah, so in the PEA, the upfront capex is about $110 million US. So as a small company, we feel that that's a capex number that we can absolutely tackle. We've got the foundational team to do that with myself, Brad, and Gary. And, there's plenty of great projects out there that are owned by juniors that have much higher capex hurdles. So whether or not, it's us or someone else that may take us over, we feel this is a project with a low capex hurdle that has a very strong possibility to become a mine. Mm-hmm. Let me give you a more accurate depiction of where the project is located. So as I said, it is in British Columbia. So we're up sort of in the northwestern corner of the province. The closest town or city to us is Juneau, the capital of Alaska. Juneau is actually named after a mining prospector. So this is a very mining friendly area. And the closest town on the BC side is about 100 kilometers north of us in Atlin. So this is a fly-in, fly-out, off-grid project. However, it is very accessible given that Juneau and Atlin are not all that far away. We're sitting on 61 Crown grants, so that means that we own the surface rights, and that's always very advantageous as you move a project forward into production. And in terms of the system type here, this is a mesothermal gold vein system, very similar geology to what you would see in the Red Lake camp of Ontario for high-grade underground gold mines. So as I mentioned, we do have a very robust PEA on the project. That was based on our NI 43-101 resource table here. So you can see about half the tonnage, half the ounces are indicated, the other half is in inferred, and the 10.8 gram per ton indicated, the 10.2 gram per ton inferred. These represent head grades to the mill, so there's already a 20% mining dilution rate factored in here. So this is a very high grade project, as I mentioned several times. So I was looking at recent analyst reports for the last quarter of global gold producers, and if this were a mine today, we would actually be number 7 on the list in terms of the world's highest grade gold mine. And that's why we have a very robust economic picture of this project, very low cash costs. So as everyone can note here, as we walk into a feasibility study, we need to infill drill on the inferred, and ultimately that's the real next step to catapult this project forward. So we're fully permitted from the BC government. We're funded with a strong treasury, and this spring we'll start off a very extensive 24,000 meter, 47 hole infill drill program. So Johan, you asked previously about the upfront capex. It is stated here at about 110 million US. And again, being a high grade project, the grade drives everything here. You can see the OPEX per ounce is about $400. The all-in sustaining cost is about $500. And based on the resource, have about 80,000 ounces of production over a very healthy 8.5-year mine life. So again, these numbers.
Yeah, sorry. How fast do you think you can accelerate this, let's say, to feasibility and then finally to production?
That's a good question. So, it's all one step at a time. So the real foundation to move into the fees is the infill drilling. So that would be basically spring and summer. And then we can get started on the feasibility study in the fall. And that would probably lead into Q1 or Q2 of next year, completing a feasibility study. But those are just guesses at this point. We really want to focus on the infill drilling. And I believe the market will start to appreciate CanaGold a whole lot more once we show some drilling results here. 47 holes. It's a very extensive program. Every hole is designed to hit. So those will be some pretty appetizing news releases.
Super. So could we say that you are probably 3 years away from production if things go the right way?
Yeah, I mean, those questions are already, they're challenging to answer when you're at a PEA stage because there is permitting involved. But, like any project, we have multiple stakeholders. We have support from all of them. As I said, we're not shy about moving this project forward ourselves. We've already been approached by multiple different sort of non-equity project finance providers. But I think, 3 years is probably realistic. But I think we can start to narrow down on that in future updates.
Yeah, it's just an idea for our viewers, because it's always important to get a little bit of a time frame. Yeah, of course, it's for sure you cannot nail it now on the spot. That's impossible.
Yeah, I mean, whether it's 2, 3, 4 years, that remains to be seen. But given our valuation here, there's definitely significant upside to be realized.
Great.
So let me give you a cartoon image of the ore body. So basically, the upper left area where you can see sort of the smaller yellow color, that represents where the old timers were mining. There is some remaining resources there, but those are not included in our NI 43-101 resources, not included in our mine plan. So our focus is the much larger yellow area. That's the ore body that CanaGold discovered. And that's where the 1 million ounces sits at 10 grams. Important to note here is you can see the blue arrows. So the deposit is open at depth. And you will recall earlier on, I made the analogy to the Red Lake camp of Ontario. Our deposit only goes to about 600 meters below surface. In the Red Lake camp, high-grade gold mines over there can go for 2, 3, 4, 5 times this depth. So there is still a very strong blue sky potential to this project. We do, however, have a very healthy 8.5-year mine life. So that's justification to move this into a build decision, as we talked about, as things progress. But there's a strong possibility this could be a 10, 12, 15-year mine life. That all remains to be seen. And as we get into that 47-hole infill program, we will probably see results that we've seen in the past on this project. So let me give you an example here of the best drill holes this project has produced. 6 meters of 45 grams, 8 meters of 32 grams, 5 meters of 25 grams. These are all world-class drill holes. And we would certainly anticipate, as we get into our infill program, we would see results very similar to this. So we're chomping at the bit. We can't wait for spring to come to get the drill started. So that summarizes New Polaris. We do have a portfolio of grassroots exploration projects. This is our Windfall Hill project in British Columbia. It's about 5,000 hectares. We're somewhat close to the Blackwater project that New Gold recently sold to Artemis. It's a 10, 12, 15 million ounce deposit if you include the silver component. So we've got a neighbor there that's moving things forward. And when we raised our financing, Johan, I mean, primary use of proceeds was towards New Polaris. So this is a very interesting project. It could be a Blackwater-Davidson lookalike. It's very grassroots. So we're in conversations with a few parties that would look to option this property to us. It's just another way for us to create shareholder value without spending our money on drilling a project when we want to focus on New Polaris. We also do have a portfolio of projects in these. We're working on a few ideas right now to perhaps spin this out as a dividend to shareholders, or maybe a package option agreement to another company that wants to go public. The primary project in this portfolio is Fondaway Canyon, and our partner there is CanaGold. And they recently put out a few drill holes yesterday in the news, and they got some good results. So as we exit the US, we had no intention of spending any more money there. We were happy to option out Fondaway to CanaGold, and they've made due on their promises of drilling the project. And our basic model when we spin anything out, even though we're not a project generator, is that we would like to receive cash payments, share payments, NSRs, as well as minimum property expenditures. So these help with our G&A costs.
What would be the NSR there? So like 2%, I think I read.
Yeah, you're right. So the NSR is 2%. There's a typical 1% option to buy out. But as they move this forward, we truly feel that NSR will have significant value, which we could keep for ourselves or even sell it. Fondaway Canyon does have a resource on it, so it's sort of an earlier stage project than New Polaris. I would categorize it as advanced exploration, but it's got about a 6 gram, 1 million ounce resource on it. It's a little bit early to determine if this was an open pit or an underground type project, but CanaGold will sort that out as they advance. Turning towards our peer valuation. So our enterprise value per resource ounce in the ground, and this only includes New Polaris, it does not include Fondaway, because for all intents and purposes, CanaGold will probably buy the project 100%. So we trade at about $30 an ounce, and our peers, as we see them, are more in sort of the $60 to $80 range. And by peers, I mean projects that have NI 43-101 resources in Canada or the US. So as a management team, we feel there's a very strong opportunity here for a re-rating, and I think we need to get catalysts out to the market to get that recognized, and that will come in due course as we do our infill drilling. Again, it's 47 holes. There will be, a lot of news releases with great drill results.
That's right, and we should say CANA is CanaGold.
Correct. So in summary, again, our enterprise value is $30 an ounce in the ground. We'd love to see that trading higher, more in line with our peers. And I would also say, in addition to that, over the next 12 to 15 months, as we transition from resources to reserves, enterprise value per reserve ounce is probably more in the $150 plus in terms of our peer group. Even though we're focused on New Polaris, we're eyeing other projects in Canada. Not grassroots, but we're looking at more ounces in the ground to maybe look at a secondary flagship. But in the meantime, we do have 2 gold projects, each with 1 million ounces, Fondaway Canyon option to CanaGold and New Polaris. We're led by a great team of geologists, engineers, and financiers. And again, we recently closed off that financing with a healthy treasury here of about $8 million. So we've definitely got our work cut out for us for 2021. And we'll have some really interesting news as we get into the infill drilling at New Polaris. Excited for spring.
Super. That's great. Yeah. So anything you want to add?
Not that much. I mean, in terms of what are our upcoming news releases, we do have a bit of a wait until we drill in the spring, but we will have news coming out on our Princeton property. We've optioned that out to another company, and we expect drill results in the coming weeks. We're working on an exploration agreement with the First Nations group on our New Polaris project. They're fully supportive of us to move that forward, and we're just going through sort of the final changes to the agreement there. So we'll have a news release on that, and then we'll also announce the drill contract on New Polaris, and then ultimately leading into springtime when we kick off the drilling. We have a fully functional 20-person camp, so ultimately we're just waiting for the weather so we can get in there and start drilling.
Fantastic. So you said you have over $8 million in the bank. You want to drill 47 holes with 24,000 meters, if I'm correct.
Yeah.
So what are the drilling costs, meaning how long will that money last?
No, that's a good question. So the full-on budget, that includes drilling, assays, our geologists, it's about $6 million.
Mm-hmm. Okay, so for this year, you are safe.
This year we are safe. And if you want to get into more detail, I mean, we do have those warrants with an accelerator on there. So if we start to get some good news releases out and the share price moves, there's the optionality for us to call in the warrants. So we specifically engineered the accelerator there to anticipate what events would pan out at New Polaris. So we're pretty comfortable that we could get a financing from the warrants. I don't have a crystal ball, but once we get those drill results out, I mean, that's going to start to move everything for us.
Yeah, I mean, that's for sure. This is key for delivery, that you have good drills and that you can really not only counter that, but build on that, I would say. And I mean, you have a very solid foundation in the project here.
Yeah, absolutely. And just to sum it up again, it's Western Canada's highest grade undeveloped ore body, 10 grams per ton with a 20% mining dilution already factored in. This is a world-class project. It's very robust. And we'd all love to see higher gold prices, but this is a project that does not need higher gold prices. If it were a mine, it would be the lowest quartile on the cost curve.
Yeah, definitely. I know why I'm a shareholder.
I appreciate your support.
Yeah, thank you very much. No, I mean, it makes absolutely sense. And you are definitely undervalued. The only thing is now you have to deliver with the drills. And then the thing is moving. I have no doubt on the gold price that it will go slightly higher, but as you said, you don't need it. And that is really important because your project at 1,500 is so economic that it's not a problem. So at 1,800, it's even much more economic. So this is fantastic, you know?
Yeah, absolutely. I mean, I don't even want to answer what the IRR is at the spot price, but
significantly higher, I would
say.
Very,
very robust.
Exactly. Super, Scott. Thank you very much. Great presentation. And yeah, I have a good feeling that we talk very soon because your news flow should start by, say, April, May latest.
Absolutely. Yeah.
Super. Fantastic. Wish you all the best. I would say hit the drills, hit it very hard and hit it soon, to be honest, because we want to see good results.
Absolutely. Definitely looking forward to it.
Super. Thank you very much, Scott. All the best.
Okay. Appreciate your time. Thank you.
Ladies and gentlemen, that was Scott Eldridge, the CEO of CanaGold, the former CANA Resources. Yeah, and you heard it. I think this project speaks for itself. Outstanding PEA, outstanding economics, already even calculated at $1,500 gold. And as Scott pointed out, it is in BC in Canada, so it's not like out of the boonies somewhere in the world. This is fantastic. This is what we want to see, and we need definitely new gold production in this world, as gold production is going down the next years worldwide. And so CanaGold is great positioned. And to be honest, with a market cap below $50 million today and $8 million in the bank with 24,000 meters drilling coming up, they will hopefully produce a lot of good positive results. So I have a good feeling that there's a good chance that this stock price will go much higher. So check out the company. Thanks for watching us and bye-bye from Switzerland.